Good morning, everybody, and welcome to the Trade Talk podcast. Today, global cues are completely flat, and even the Singapore Nifty is also following to the same. It is up nominally. Let's move on the domestic markets where the corona cases are increasing, and in the medium term, it's a cause of concern. So we need to keep a close watch on the rising number of cases. On Friday, due to downward activity in the long-term bond yields and weakness in Brent crude have boosted the sentiment of our markets. The bullish momentum continued directly from 14,350 to almost 14,780. We were of the view that 14,450, 14,350 would be major support for the market, and we should look for adding few strong companies between those levels because market was turning oversold, and that actually turned most beneficial for short term as well as medium term investors. Market quickly moved up from 14,350 levels and ended at 14,780. Heavyweight shares in the index rose sharply. On a weekly basis and daily basis, the market has formed a reversal formation after completing the corrective pattern at 14,350, and we were talking about the same, that it's a corrective move that we are witnessing after the spectacular rally that we witnessed from the levels of 13,500 to 15,450 levels. So technically we feel that the market has completed corrective pattern at 14,350 and now it is reversing back. But even if the correction is completed, the current rally will be called a pullback until the Nifty Sensex crosses 15,350 and 51,850 respectively. So 15,350 is the mark above which only we can say that market is entering into new wave. Nifty has formed a bullish piercing pattern, which means it has absorbed selling pressure which was there on Friday at the opening. So huge selling pressure was there, but market has absorbed that and it closed above the highest point of the daily basis as well as 50% mark of the previous day, which is always positive technically, and it helps market to revive from lower levels. The Nifty could go up to 14,850 and 14,950 in best case scenario if we see continuation of the current rally without any correction. Then 14,850, 14,950 should act as major resistance for the market. And in the past, when the market was correcting, market has spent a lot of time and taken multiple time supports at 14,850 levels and between 14,850 and 14,950. If the correction in bond yields continues, as today we are seeing it is again slipping and it is currently trading at 1.6775, which is positive for emerging markets, but the bond yield is dipping, but dollar index is trading little bit above the levels of 92, and crude, which was around 63 64 levels, it's still trading at an unchanged level. So if we see continuation of the weakness in bond yield, then we can expect further more activity for bank nifty. And if inflation gets controlled because of this fall in bond yields, then we can expect activity in FMCG stocks and they should also do well. So broadly we are going to focus on FMCG stocks also in today's date. On the downside, 14,600, 14,450 would be major support for the market. So if there is any dip during the week, then 14,600 should act as major support for the market, and in worst case scenario 14,450 it should not break. uh, Keep buying strategy on dips, and focus should be more on FMCG as well as financials. From the FMCG basket, along with Britannia and HUL, we also like McDowell's as well as ITC. And from the financial space, we need to focus on few NBFCs because there we are seeing some momentum. They are exhibiting strength, especially Chola Finance and Mahindra Finance. There we are seeing some activity, and we should be uh, buyer in these two stocks if they are available at their important supports. From the basket of banks, our top picks are ICICI Bank, HDFC Bank, and SBI. From the technology basket, as we mentioned, that we need to focus for the coming month, and based on the overall formation and their long-term charts, we should be buyer in Infosys as well as Tech Mahindra with a view of at least next 10 to 15 days. And from the auto basket, there we feel that Escorts should do well along with the Bajaj Auto, and a few other companies may remain under pressure because of some specific global development, and that is why for auto sector we need to be little bit careful for the day. That's all from my side. With this, I am ending today's morning podcast. Thank you very much for listening in, and have a great day to all of you.